Okay, good afternoon, everyone. Welcome to Asian American Chamber of Commerce webinar. AACC continues to provide updated information from government to help small businesses. I am Stephanie Shea, work for M&T Bank, and serve as the chairwoman of AACC's board. Before we start, I'd like to give you a brief introduction of Asian American Chamber of Commerce. AACC is a bridge to success across the entire community, leading professional resource partner for AAPI businesses in the greater Washington, D.C. area. In today's environment, the virtual approach makes AACC to reach out and serve even more businesses outside of the DMV area. Fortunately, we have great leaders on our board from different fields to contribute and support AACC. Most importantly, AACC thanks to our sponsors for their continued support. Without their financial support, it will be hard to provide services to our members in the current circumstances. I'm proud that my employer, M&T Bank, is the sponsor of today's event. As of end of 2020, M&T again ranks among the nation's top 5 small business lenders, from number 7 in 2019, according to SBA's record. I pat myself on the back. Yeah, we have several events in May. May 14, we have member showcase, and then we have members orientation. This is second Friday of each month, let you to understand more about the chamber. And most importantly, we have this coming signature event. It's Jewels of Asia Awards Gala. This one is, as you know, that May is Asian American Heritage Month. So we welcome you to join us at this AACC Awards Gala to shine AAPI in May. And in June, we are helping restaurant businesses to boost their sales. So if you know any restaurants, you can let them know that we have this program, and please join us to help our community. And now I'm very pleased to introduce today's presenter from the Small Business Administration, SBA. Nick Rajpara is an economic development specialist at the Washington Metropolitan Area District Office, and he holds master's degrees in MBA in Business Administration and MPP in Public Policy. In his role, he collaborates with local SBA resource partners, including public and private. In addition, he is the program manager for SBA's Emerging Leaders Program. And also, Nick also conducts site inspections for HubZone certified firms in the Washington, D.C. metropolitan area. Without further ado, let's welcome Nick. Nick, it's all yours.
Thank you, Stephanie, for that kind introduction. And it is so good to be back with this group, the Asian American Chamber of Commerce. I was telling Stephanie and Cindy, this group feels like home to me, because ever since the pandemic, ever since the new programs that were introduced through legislation of Congress, signed into law by the president, were introduced into law last year, stemming from the CARES Act, such as paycheck protection programs. The first presentation that I ever did was with the Asian American Chamber of Commerce. So it always feels like coming back home. Well, we have a really hot new program, which is timely, which is the Restaurant Revitalization Fund. And what I like to do is I like to take control. Let me make sure everyone can see my screen. All right. All right. Could you see my screen here, my presentation? Yeah, Stephanie. Okay, great. All right. Let's see. Right. Yeah, let's start. So as I was saying, you know, it always is a homecoming. I've developed a close relationship with this group, the pandemic. But without further ado, what I'd like to do is jump right into the topic. We have a lot to cover in the Restaurant Revitalization Fund. It is a very, very popular topic. It's timely. The program itself was created out of, sorry, getting ahead of myself. The program itself was created out of the American Rescue Plan that was signed into law by President Biden on March 11th of this year. The American Rescue Plan appropriated $28.6 billion for the funding of this program. And the appropriations and the funding for the program are available until they are spoken for. The funds proceeds must be used no later than March 11th of next year. So in addition to these dates here, let me give you two more dates which are much more pressing and of the utmost importance. The first date is April 30th. That's this Friday at 9 a.m. You could register to apply. So what does that mean? If you go to restaurants.sba.gov, which is where the application is, and I put this link in the chat as well, please, please, please go there as soon as possible. Register to apply on Friday. So create your username, password, profile, whatever you have to do, so you don't have to spend time when the application is actually going to open on Monday at 12 p.m. Eastern Standard Time. So if you could go on Friday or even over the weekend and set up your account profile, that would be wonderful, and it'll get you ready to apply the minute the program begins at 12 p.m. Eastern on Monday, May the 3rd. So those are some dates I would likely reference again, but please do notate those. Please do go to those links that I put in the chat, which is restaurants.sba.gov, and also the link for where you could find general information on this program and all the other pandemic assistance programs by the SBA. And there's another link for all the coronavirus funding programs, and they're listed right there in the chat. And forgive the noise in the background. I live on a very crowded and busy street in Washington, D.C. So forgive that background noise. Okay, so who is eligible for this program, the Restaurant Revitalization Fund? Of course, I may go fast in parts of the presentation because we got so much to cover. So I might not read every single bullet point of every slide. I might give synopsis, but I'm going to go fast, but I'm also going to make notes and pay attention to what I think would be important for you. These are the eligible entities that could apply: restaurants, food stands, food trucks, food carts, caterers, bars, salons, saloons, I should say, lounges, taverns, snack bars, and then for non-alcoholic beverage bars, such as coffee shops, ice cream shops, bakeries. Those are the typical what you think as a quote-unquote restaurant, cafe. But in addition to what you typically think, you also have some groups, some eligible entities, which sell food, such as brew pubs, breweries, wineries and distilleries, inns, and other licensed facilities. If you notice, there's an asterisk by each of these entities because you typically don't think of these entities as quote unquote restaurants, but they do generate a portion of their sales, their gross receipts by selling food, indoor dining. So if you are in these asterisk categories, As long as you generate at least 33% of your gross receipts from your on-site sales of food and drinks, you do qualify for this. Remember, the threshold is 33% of your on-site sales had to come from these locations, right? So the topic of inns, that was a discussion on our team. Bed and breakfasts is it's a place to stay, but it's also a place where you could also consume food. So at least 33% of your gross receipts had to come from there, as well as other asterisk entities. And we could always go back if there are any clarifications or confusion that has come up on this. Who is not eligible? State and locally owned enterprises. I know that this group is located out in Virginia. Virginia is known to have state local control of certain types of businesses. So, if you're state locally owned, you do not qualify. If you have more than 20 locations, you do not qualify. If you have a pending application or received funding for the Chartered Venue Operators Grant, you do not qualify. If you're a publicly traded company, you do not qualify. If you're permanently closed, you do not qualify. You're a nonprofit, you don't qualify. And if you do not meet eligible funding of up to at least $1,000, you do not qualify. And I'm going to go over the calculations on how we determine the funding amount for this program in a little bit. Okay, next slide here. How much am I eligible for? Okay, so the ceiling is $5 million per location, not to exceed $10 million total. So if you have more than one location that you have an ownership interest in, you cannot exceed $10 million, but it's up to $5 million per location. The minimum award is $1,000. If your calculation falls below $1,000, you get nothing, unfortunately. So the minimum is $1,000, and that does not mean that you automatically qualify for $1,000. You had to still follow the formula that I'm going to share with you, but you got to at least qualify for $1,000 to get awarded anything. And of course, you're tapped out. You're capped at $5 million. Okay. So important to know, to be eligible to receive funds, you do not need to register at sam.gov. You do not need a DUNS number or a cage identifier. If you do not know what those are, that's perfectly okay. If you're a government contractor, you are very familiar with this. To get any award at all from the government, whether it's a government contract or a grant or anything from the government, you would usually need a sam.gov profile. You'll need a DUNS number and a cage identifier. So for your government contracting members of the chamber, they're very familiar with what this is. Restaurants, typically not government contractors, are not familiar. So the program was developed to bypass all this. So it makes it easier for the restaurants to apply. They do not have to go through the same process as a government contractor. All you need is a valid EIN number. You could have an individual tax identification number. If you want to know what this is, please go to the IRS website. But you just need a valid EIN number for your business or a ITIN number. Okay. Now, what types of organizations are eligible? I have the list up here: C Corps, S Corps, partnerships, LLC, sole props, self-employed, independent contractors, tribal concerns, LLCs, taxes, S corporations, and sole proprietors. Again, I know I went fast here. Please go to our website. Even the application portal itself would give you a lot of this information. So that's the most important. And I know the Chamber of Commerce, Asian American Chamber of Commerce, Cindy and her team have this slide deck. They can make it available to you, which is fine, but I encourage you to go to the website. Those links that I put up in the chat, much better source of getting the most current information. Okay, Who else is eligible to apply? Franchisees, really important. You know, franchisees, you know, these are your famous brands that we all know and love, that we see all day when we walk around, drive around. They're eligible to apply. You know, just because there's a popular brand out there, you know, owned by a franchisor, franchisees typically are small businesses. They own a location or two or three. And, you know, I know that, you know, I'm being South Asian, franchising is a very typical form of small business ownership in the South Asian community, as I assume also in the Asian community at large. So this is a very important cohort and subgroup of small businesses that could apply. So franchisees could definitely apply. The rules are that your franchisor has to be located in the SBA franchise directory. If you want to look up the SBA franchise directory, just put that SBA franchise directory in your web browser, it'll pull right up. Now, if your franchisor is not listed in the SBA franchise directory for whatever reason, they could email franchise@sba.gov to get a listing in the SBA franchise directory. They had to submit their franchise disclosure documents and work with the SBA to be listed. So you could, as long as your franchisor is listed in the SBA franchise directory, you're eligible. And that's most brands that you see that you know are listed in the SBA franchise directory. If you're in bankruptcy, you could potentially apply. As long as you file for Chapter 11, 12, or 13, and you have an approved plan for reorganization, you could apply, right? That is really important. So you gotta have an approved operating plan for reorganization, an approved plan by a bankruptcy court to apply for this program if you file for Chapter 11, 12, or 13. Now, if you file for bankruptcy and you're permanently closed, or you're under Chapter 7 liquidation, or you do not have an approved plan for reorganization, you're not eligible to apply. Also, permanently closed does not mean if you had to close temporarily, obviously, for whatever reason, and then you reopened, but permanently closed is permanently closed. You actually shut down and shuttered your restaurant. Okay. How do the other relief programs interact with RRF or impact your funding for the Restaurant Revitalization Fund? Most importantly, you had to know that any Paycheck Protection Program funding that you received, your business, your restaurant received, that would be subtracted from your RRF funding. That's the most important thing you got to know. So if you received any PPP funds, you're going to be subtracting those from whatever you'll be receiving from RRF. This is important because I know that a lot of my restaurateurs that I was working with, they had trouble getting the PPP first draw and the second draw. And they thought they were really nervous because they could not qualify for whatever reason. Well, if you did not receive that, this is good news. That funding you received for PPP would have been subtracted from your RRF funding anyway. So that's the most important thing. You must use the same EIN number that you used for PPP. If you used a different EIN number for your first draw and a different EIN number for your second draw, you're going to have to put in both EIN numbers and account for all your PPP funding that you received. That is very important. You have to subtract. The application would ask you for this and would deduct any PPP funding received from your eligible RRF funding, Restaurant Revitalization funding. Now, what happens if you have an outstanding PPP application that's not funded? You would have to withdraw that application if you're applying for the Restaurant Revitalization Fund. And of course, if you are applying for the Restaurant Revitalization Fund, you had to withdraw your shuttered venue operator grant application, or you had to return the money or any grant funding that you received, which I don't think anyone has because the Shuttered Venue Operator Grant portal just went live this week. But yeah, that's how these other aid programs interact with RRF. Okay, you'll have to also attest that the current economic conditions make it necessary for your restaurant to receive this funding, and that the current economic conditions have adversely impacted your restaurant's operations. So there's an attestation in this application for economic uncertainty. All right, so eligible funds. The eligible fund usage is a lot more flexible than PPP. So if any of you received PPP, there was a formula that you had to follow to get the funds forgiven. I'm not going to go over that right now because this is a presentation on the Restaurant Revitalization Fund. But it's a lot more flexible than PPP. These are the buckets that you could use your funds, your restaurant revitalization funds. Payroll cost, including sick leave, utility payments, maintenance, supplies, cleaning, protective equipment, food and beverage expenses, cost of goods. Having been a restaurant, I had a cafe, interest in a cafe, I know that's a significant part of your expense. You could use your restaurant revitalization funding for that. Covered supplier cost, and operating expenses. Any operating expenses that you have, such as insurance, marketing, licensing, legal, point of sale systems, all those are eligible. Construction costs. Now you can, like the other aid programs, you cannot use these assistance aid programs to expand your business, except for one exception. That is construction of outdoor seating, right? You cannot use the funding to construct indoor seating, expand your restaurant internally, but you could use it for outdoor expansion. You could use it to pay off ongoing business debts. You can't use it for prepayment, but your ongoing business debts, such as your mortgage obligation, or if you have debt service, you could use it for your current debt service, but you can't use it for refinance, right? So your ongoing debt payments, but you can't prepay. I'll be happy to go over any of that if there's any confusion. And I do want to allow enough room for questions. So Cindy, Stephanie, please stop me and make sure that we have enough room for questions, or at least give me a 5-minute warning. You have a year to use the funds, you know, but it has to be before March the 11th. So between, and you could use these funds for any expenses that you incurred from the onset of the pandemic. The onset of the pandemic we're defining as February 15th of last year to March 11th of next year. So 1 year, the anniversary of the signing of the American Rescue Plan. So March 11th, you know, next year is the deadline to use the funds. If your business has permanently closed, you have till March 11th or the closing of your business to use of funds, whatever occurs first. Hopefully this is not the case for any of you folks. And the funds that you do not use had to be returned to the government, which is the last bullet point of this slide. Okay, when you use the funds, you had to provide a detailed expenditure report. There is a provided self-report data detailing the use of distributed funds available to 2023. SBA would be providing guidance on this detailed reporting on use of funds in the coming weeks. So just keep records on how we use the funds. Okay, that's the most important piece of this slide that you want to take away. Okay, remember I told you the calculations, the different calculations you could use that would determine your fund amount. I'm not calling this a loan amount because it's not a loan. I'm not calling it a grant because there's a legal definition of a grant, but this is a fund award. I'm not going to go into those details right now because that's not that relevant to you, but your fund award would be determined by when you started your business operations, okay, for that your particular restaurant location. That is really important. So you're going to use the calculation on when your operations in your particular restaurant actually began. So if your operations in the restaurant was prior to January 1 of 2019, so if you were open and in operations before 2019, you're going to use calculation 1, which is taking your gross receipts for all of 2019, subtracting them from all your gross receipts from 2020, and subtracting any PPP loan amounts that you've received. That is a calculation 1, remember. So if you opened before 2019, take your gross receipts for 2019, subtract all your gross receipts for 2020, and subtract your PPP loans, and that would be your fund amount. That's calculation 1. Calculation 2. This is, let's say, if you opened in the middle of 2019 and you do not have all your gross receipts for 2019. How do you do this? What you do in this case, if you open in the middle of 2019, you take your average gross receipts in 2019. So whatever months you were open in 2019, add all those months together, divide them by the number of months that you were open, multiply that number by 12, right? And that would give you your 2019 average gross receipts. You take that number, you subtract your gross receipts for 2020, and you subtract your PPP loan amounts, your first or your second draw. That would be the number that you use. You know, that's calculation 2. Calculation 3. All right. What happens if you did not open in 2019, but you opened in 2020, right? Or, you know, you have not yet opened, right? But you opened in 2020 and before March, you know, before March 10th, before the American Rescue Plan was signed. That's calculation 3. So if you opened in 2020 and before the American Rescue Plan was signed into law this year, what you would do is you would take whatever you spent on your opening costs, so all the eligible expenses you spent in opening, right? This is your leasehold improvement, whatever equipment you purchased, whatever food you purchased, whatever cost you incurred in the opening, they incurred between February 15th of last year and the day that the American Rescue Plan was signed. You take all those costs they incurred. So hopefully you have records of all the costs that you incurred, and you would subtract all the costs you incurred from your gross receipts in 2020 minus any PPP loan amount. And that would be what you would receive in funding, right? That's calculation 3. Again, if you were in 2019, there's a bullet point at the bottom. If you partial open in 2019, you have the choice between using calculation 2 and calculation 3. Note that if you do use calculation 3, the processing time would take longer because it's a little bit more complicated, and SBA requires a little bit more verification on if you've actually incurred these eligible expenses. So it is more expedient to use calculation 2. Just how to say that. Okay. So that is calculation 3. There is something called calculation 4, which I'm not going to get into. That's if you have more than one location. You could use different, let's say you have more than one location. You have a location that opened in 2020. You have a location that's been in operation well before 2019. Of course, you could use the different calculation amounts for these various locations. Okay, but I'm not going to complicate that too much. And if there's specific questions, I'll be happy to entertain those later. Okay, what are gross receipts, or what could I exclude from gross receipts? Very important question. Gross receipts are typically, for the purposes of this program, gross receipts are your receipts that you generated from the sale of food and drink at your location. Gross receipts for these programs are not your PPP funding. They've already been subtracted, right? So it's not your PPP funding. If you've received debt relief on any SBA-backed loan under Section 1112 of the CARES Act, that's the debt relief program that was introduced in the CARES Act, where the SBA would pay 6 months of principal, interest, and any fees on your SBA-backed loan of the CARES Act. That does not count. You do not have to report that in your gross receipts. Any funding that you got from the economic injury disaster loan, the advance for the loan, the targeted advance, or any other grants that you got from any pandemic legislation from the CARES Act onwards, that is not included. You don't have to put that in gross receipts. Any state and local grants you receive, do not include that. And any monies that you receive from the Randolph-Shepard Act, you do not have to put that. The Randolph-Shepard Act, for those of you who do not know, that really applies to blind-owned businesses. Probably not as much of an interest to this group. That will be interest to the group I'm presenting next week when I present to the National Association of Blind Merchants. I'm sure they have some questions on that. But if you're a blind-owned business, you do get money under the Randolph-Shepard Act of 1936. But if you do fall under that, you are qualified, you do not have to put that money in your gross receipts formula. It's really what you generate from the sale of food and beverages. How do you apply? This URL is the utmost importance. I put this in the chat, restaurants.sba.gov. Please, please, please bookmark that. Please go there as soon as possible. All the forms that you need are located right there. There's a sample application. Practice filling it out. There's a portal you could register to apply at restaurants@sba.gov. Very important URL. More important than the slide deck is to go to that particular website and familiarize yourself. Your point of sale vendor, they're going to become your good friend for this program. And I'll tell you why in a minute. But so if you use a point of sale vendor, if you, that would be anyone you do your merchant services through, and they are your point of sale. They, your cash register, whoever you use for a point of sale, please, please, please collaborate with them. Get to know them. They're going to be very important. You could apply through some point of sales vendors, which I will talk about, namely Square and Toast, and I'll go over that again. But other point of sales vendors that you cannot apply through, you could still download data and download packets, which you would use for your RRF application. You could apply through the telephone if you do not have access online. Just know that when you apply through the telephone using this number, 844-279-8898, that application is going to take a lot longer. They would have to mail the application to you once you apply over the phone. You would have to sign it, get it notarized, mail it back. So if you do not have online access, please, if you can, put yourself in a situation to get online access for a brief period. Office of Capital Access is stating that average application times take about 30 minutes. So if you could get to an internet cafe or a friend's place who does have internet application, if you could just go there for 30 minutes or so to complete the application, that would be wonderful and advantageous for you. What forms do you need to apply? SBA Forms 3172, that is your application. Now, if you go to that website, restaurants.sba.gov, the form is right there. Familiarize yourself with it. Of course, the actual form would be 3172 would be much more friendly than that paper form that is on the website. It's an interactive form. It's an interactive application with chat bots. So if there are questions you have, there's drop-down menus. It's very user-friendly. We did a walkthrough through it yesterday. It's wonderful. But that would be automatically generated when you complete the application. IRS Form 4506T, this is a request for tax transcripts. Again, that would be auto-generated when you complete the application. They go to the IRS stating that SBA could access your tax records. Gross receipt documentation, very important. What is your gross receipt documentation? Your business tax returns, very important. Your Form 1040 Schedule C, if that's what you use to file. Any form, if you're a partnership, Form 1065 includes your K1s, your bank statements, very important, and any externally prepared financial statements by your CPA, preferably. If not by your CPA, then at least by your internal financial system, whether it's QuickBooks or whatever you use. Point of sale data, very, very important. If you do not have your tax returns, your point of sales data is your next best thing. It is also considered the gold standard. So that's why I stated in the previous slide, if you have a point of sales provider, point of sales vendor, start, getting ready to start reaching out to them, because they are going to be your best friend in preparing your application. All right, so what documents do you need to use? Okay, so let's say if you're using calculation 1 or 2 that we went over, these are the documents that you would need. You would need the application, which that would self-generate from the website, the 4506T, also self-generate, your tax returns. If you have those for 2019, that'll be wonderful. 3 months of bank statements, gross receipts. You could get those from your tax returns that you filed. If you do not have those for your tax returns, please go to your point of sales report. When I was in business, I was easily able to generate gross receipts for any given period through my point of sales system. So I would just contact my point of sales provider, or even go online and just punch in whatever months that you need the point of sales report for, and you could generate your gross receipts. That's very important if you do not have your tax returns. If you do not have this, the SBA would accept a prepared financial statement, preferably by your CPA, and along with a comfort letter stating that that financial statement is accurate and is verified by a third-party CPA. Calculation 3. Okay, this is if you're using calculation 3. This is if you opened, you're not open, but you've incurred expenses. Okay, what you need, of course, you need your application forms, your 4506T bank statements, but you would also, what the SBA prefers is your tax returns, your point of sales reports for 2020, your point of sales reports for 2021, expense documentation. What do you need? Okay, that's to show your revenue, but what do you need to show your expenses? Okay, you need preferably a CPA comfort letter with a profit and loss statement and balance sheet documentation. That would be the most preferred. So if you could get these financial documents with the CPA comfort letter saying yes, a licensed CPA is comfortable and has verified these documents, that's the best. Or if you do not have that, externally prepared financial statements, profit and loss statements, would be needed, and signed and dated and certified as to the accuracy by the applicant, and attestation that you're reporting this truthfully, and also any eligible expense documentation, payroll, invoices, pay stubs, whatever used, to pay your vendors or leasehold improvements, your general contractors, please have all that documentation. Okay, what else do you need if you are a brew pub, a winery? Okay, so remember I told you that, you could be these, things like inns, brew pubs, what you typically won't think of as a restaurant, but you do generate at least 33% of your gross receipts from sale of on-site food and beverages. Here's the documents that you need. I'm not going to go into too much detail, but if you're an inn or a brew pub or a bakery and you do have a tasting room, or you do have a restaurant if you do have a restaurant, you need at least 33% of your gross receipts coming from that restaurant or tasting room. And you have some specific documentation that you'll need to provide to prove that at least 33% of your gross receipts from your in-house restaurant or your tasting room do come from that particular source. Okay, if you have any questions on any of this stuff, the SBA has established a hotline. This is your best place to go. The hotline for the Restaurant Revitalization Fund number is right here on top of this slide. It is 844-279-8898. You could contact your local SBA office. The URL is right there, but that hotline is really designated to answer any of your questions. Please call them if you need help with your application or have general questions. They're open from 8 a.m. to 8 p.m. Eastern Standard Time, and they also have help in multiple languages. They have help in 8 different languages. So if English is not your primary language, don't worry. You could also get assistance in other languages. Important to know. All right, so best practices, have the documentation. To know what documents you need to go to. In addition to listening to this webinar, go to that URL, restaurants.sba.gov. I'll tell you the documentation you need. Leverage your resources, your CPAs, your POS providers, start getting familiarized with them. Have that number handy. Start filling up the application. There's nothing stopping you from doing a sample application right now. If you have any questions right now, call that hotline right now. They are live right now. So that way you could get your application in on the day that the application portal opens, on day 1, hour 1, minute 1, as the higher ups like to say, the SBA. And register to apply. You can register to apply, create your profile as soon as this Friday. It's important to know that there are different priority periods that the SBA would be using in processing their application. The first priority period, known as a pilot period, would be the first 21 days, okay? So there is a priority group that the SBA would be prioritizing and processing the applications for various priority groups in the first 21 days. And those priority groups are women-owned restaurants, veteran-owned restaurants, and socially and economically disadvantaged restaurants. After the first 21 days, all the other applications will be processed in the order that they are received. Okay, so priority groups I mentioned in the previous slide are women, veterans, and socially and economically disadvantaged. A lot of restaurants, they have one or more than one owner. So it is fine to have more than one owner, as long as at least 51% of the ownership combines to be in any of these groups, right? So you could have a restaurant that is 25% owned by a woman, 26% owned by a veteran, and the remainder is owned by other. They would qualify because at least 51% is owned. Similarly, in any combination thereof. So, there are various different combinations, permutations you could go through, but at least 51% has to fall within one of these categories to fall within that priority group that's processed in the first 21 days. Applicants self-certify. So different than government contracting, if you were a government contractor, you had to prove to the SBA that you are woman-owned, right? Or socially and economically disadvantaged. You don't have to do that for this program. It's a self-certification, right? So that is important to know. So it's pretty clear what a woman-owned business is, and it's pretty clear what veteran-owned is. What is socially and economically disadvantaged? Socially and economically disadvantaged is any of these groups are listed here. If you are in any of these categories, Black Americans, Hispanics, Native Americans, Asian Pacific Islanders, or in the subcontinent or in the Asian subcontinent, you are considered socially disadvantaged. In government contracting, economically disadvantaged would correspond to your net worth, not for this program. And for this program, if you're considered socially disadvantaged, you're also considered economically disadvantaged. So the SBA is not going to be examining your net worth like they would do in the other government contracting programs. So the idea here is to streamline this program for these disadvantaged groups and these priority groups. Okay. So any organization, for any organization that is going through a reorg for the purposes will result in automatic disqualification. So this is to say, if you are reorganizing as a party group and your ownership structure is not the same, where you don't meet that 51% eligibility, you would go through automatic disqualification. In addition to the priority groups, there's a set aside for certain size of restaurants, a revenue size of restaurants that are out there. So remember I told you to be less than 20 locations or more to qualify for this program. You got to have less than 20 locations or more. If you have a certain revenue size, there's actually a set aside for you for this program. So let's say if you have a revenue, your gross receipts do not exceed $500,000 in gross receipts for your restaurant, there's a $5 billion set aside for those businesses. And if your gross receipts are, let's say, over $500,000 up to 1.5 million, there is a $4 billion set aside for this. And for restaurant locations less than 50,000, there is a $500 million set aside. What set aside means is that this money is set aside. So no matter who the applicants are and what are the funds are received, a minimum of this money is set aside for businesses that fall within these revenue size standards. And if there are any questions, I'll be happy to go through them. And I apologize, I know I'm going fast, but I do want to make sure all the information is covered. And I do want to allow for enough room for question and answer. So with that, I'm going to turn the floor back over to Cindy and Stephanie for any questions and answers.
Yes, thank you, Nick. A lot of information to digest. And I received 2 questions, but I think question 2, you already answered. Question 1, do business owners need to submit financial information when they register on the first day, April 30th?
You will need to follow the application. You will need to submit the financial information that the application asks for. They're going to ask you, particularly if you're using calculation 1 or 2, where they're asking for revenues. So have all that ready, either through tax returns or at least through your point of sale system.
Okay, great. And another question is for restaurants, if they have multiple locations, each location is different LLC and different EIN. Is there a limitation for how many locations that they can apply, or they just apply by each location?
Okay, it's a real good question. So let's say, there's an entity, they have more than one restaurant with different EIN numbers. You got to remember the rule stays, no matter, the cap is, even though you have a different EIN number for each location, you got to have 20 locations or less. The cap is 20 locations, right? So you could
before 2020.
No, 20 locations. Yeah, before at the time of application. So, so whenever they apply, by the time Monday, they had to have 20 locations or less to be eligible. They have 21 locations, they're not eligible, right? So that threshold is 20 locations. If they have different EIN numbers, they could apply under each EIN number. The tricky part is if they have received different PPP loans through different EIN numbers, you had to state all the PPP loans that you received to each of your EIN numbers for each of the applications. And all those PPP loans had to be subtracted.
And last question, normally how long does it take for SBA to review?
This is a brand new program, brand new pilot. We've not launched anything like this. We don't have any guidance on this. I would say this application is going to be processed in the order that they're received. When the funding is going to be dispersed, we don't know. We know when the funding is going to be spoken for. So it's very important to get prepared on your end now. That website, make that your best friend, restaurants.sba.gov, right? And all the information is right there. Practice filling this out. Please do a practice filling this out. So when it goes live, you don't have any issues. If there's an error or you need clarification, call that hotline now over the weekend, whenever you have time. So you could apply because funding is going to run out. But when you're going to get the funds dispersed, I'm sorry, we don't have that information right now. We're going to try to get it out it's a priority of this administration to try to get it out as soon as possible.
So it's like a PPP round one.
Yes.
You're building a plan as you fly.
Now we're hoping it's smoother than that this time. That's why we're doing these webinars beforehand, and that's why we're putting the limits on who could apply, size standards, and that's why we're also set aside the priority groups, for the first 21 days for women, minorities, veterans. We have those priority groups. So the idea is it doesn't become like PPP, and we also have a set aside for, the restaurants that fall below a certain revenue size. So the idea is to get the funding to the smaller minority-owned restaurants first.
Right. So earlier you mentioned that you encourage business owners to apply and practice, so they can. You mean they can start register on April 30th or now?
April 30th, Friday is when they could register to apply.
Right.
So registering to apply is simply creating an online profile, just like anything
but you
else.
say practice. But when you say practice, they can do it now?
They could do it now.
Oh, okay. That's good to know.
They could do it now, yeah.
One more question come in. Should we minus only the first PPP got in 2020 or also minus the second PPP got in 2021?
Both. All your PPP loans have to be subtracted.
And how about if first PPP already be forgiven?
Still, it has to be accounted for and subtracted from your.
So still need to process. Okay, minus that. Okay.
And one thing I may ask Stephanie also, there's a question, if somebody applied and received their first PPP and they're waiting on the second PPP, you have to, when you apply, you had to withdraw your application for the second PPP if you're waiting for the funds, or you had to return the money to the bank.
I'm sorry, can you repeat that?
Sure. So there's a scenario that we've been asked. Let's say you got the first draw in PPP, you subtract that, but you applied for the second draw, but you've not received the funds. You must, if you apply for this, you had to contact your bank, your lender, and ask them to withdraw your second draw PPP application.
Oh, I see. Okay, got it.
Yeah.
Okay.
Or if you received it, return the PPP funding back to the bank.
Oh, okay, got it. All right. Is there an estimate when the funds will run out?
Very, very good question. Let me say this. The estimate for the need in the market for this program is $130 billion. The Congress has given $28.6 billion. So there's 5 to 6 times the need than there is money. So this is going to go very fast. And I say this not to scare you, you know, I say this to encourage you to be first in applying. And I'm sorry, you know, and I said, hopefully the hope from, I'll tell you, the internal conversations being in the agency, I'm going to give you, I'm not supposed to talk about the internal conversations in the agency too much, but the hope that we have in our internal dialogues, if the money goes fast, and it goes fast particularly to the smaller minority-owned businesses, that would be justification to go to Congress and ask for more money for the program, similar to PPP. So, you know, Congress gave more money to PPP because the money went fast. You know, so the idea is here, if the money goes fast, that says Congress would say SBA could request more money from the Congress to give more funding. Hopefully, that's the idea behind this.
Right, that's good to know. And AAPI consider a minority, so yes. I'm sure a chamber can spread out the work. Yeah.
Very good.
Yeah, thank you very much. And do we have any questions? If not, then we really want to thank Nick for his time and explain this very detailed. Hopefully, if time allows, we can have more to educate business owners, restaurant business owners, and how to get the fund. Thank you so much, Nick. Thank you, everyone, for attending.